Hello again, Mavic traders, and welcome out to another market roundup. Let's begin a market coverage. It's a Monday, May the 16th. Hope everyone's doing well and had a good start the week. So let's talk about markets. Let's talk about how things progress from what we discussed in the currency room, and do we need to make any adjustments to our plan so far this week. So let's talk about what really happened in the markets today and do a quick market analysis. So market performance today was a bit of a mixed price action overall, and there was a whole lot of back and forth, and this is where we like to call it a choppy price action. Market doesn't really go anywhere, but in between that whole process, it gives us false hopes that market wants to sell off and the market wants to rally, but then towards the end of the day you can see that it was a bit of an inside candle from Friday. So this is an important area where we discuss the potential market bottom. The question is the market has bottom over here, or is this just a bear rally? Remember, this is a bear market right now, which means that we are likely to see some rallies in between, but they're likely to fail. So for a bottom to take place, it needs to establish a much better support where it can start to bounce back from. So we have seen this back in March, where we start to see market bottom out, and then it ensued a pretty aggressive rally. In this situation here, we made a bit of a bottom here on a Thursday. Friday was an up day. Monday is an inside candle. So at this point, we neither is confirming that it wants to rally, or neither is confirming that it wants to sell off. So this will have to wait in the next 24 hours and see where the price action goes. Looking at other areas, looking at the percentage change, again, S&P down 0.39%, World Index, Stock Index down 0.32%. A lot more weakness in crypto markets, and again, that's the area where it seems like the potentially the bottom is not in there yet, because we shouldn't be seeing this kind of slide after that recovery that we saw on a Friday. Gold was up slightly, and oil seems to be back on the rebound, and the prices are again going off the roof. So it seems like commodity markets are still kind of in a shock, both natural gas and the oil markets. Outside of that, you can see that the World Stock Index chart looks very similar to the U.S. chart. So world markets are pretty much doing the exact same thing. And then as we take a look at crypto basket, you can see we got a nice little reversal candle over here. But then since then, you can see that we haven't really made that advance. And this is where I like to talk about potential signs of bottom. Again, we are not always like to see this V-shaped recovery. Every time you look for recovery patterns, it could be many different ways. Sometimes you see a V-shaped recovery. These are the best, because as soon as you catch that bottom, it starts to rally you off of there, and you had a great entry. Sometimes you get a W bottom, where it goes back and forth before it starts to go higher. Sometimes we see a U-shaped recovery. So there's all sorts of different scenarios where markets could potentially make a recovery, but not every recovery is going to be easy to catch, especially if you start to get that W shape or a U shape. The easiest one, or the best one, is really the V shape, when the prices bottoms out like it did over here, and this just potentially recovers like that. So far we're not really seeing signs of that. And in that case, we still need to be a lot more cautious about the market. We're still below all the moving averages, and the potential outlook remains a -2 to a -3. Of course, we want to scale back on some of that bearishness if the markets start to show signs of bottom, but that doesn't mean we flip the script and try to go extra bullish, because the market not really giving us that signal as of yet. If the markets can break out of this resistance, as you can see over here, this short-term resistance, this is where we could see potential more up gains in the market, but so far we have to be a lot more cautious. So very choppy price action, but most importantly, we also have to see the economic data that came out of China. That was very negative, and let me show you what I mean by the negative data. So let's actually go into Forex Factory just to see the movement price action that we got from China numbers. As you can see, that the retail sales was down 11%, down from 6.2 expectation. If you look in the history and you look at the graph, you notice that the only last time we saw this was around the time that COVID happened, and everything out of China really plummeted because of the shutdowns and everything. And you can see that as we're seeing a bit of a resurgence that took place in China, that has definitely slowed things down. Retail sales is doing the exact same thing. If we go into industrial production, which is key, as it shows how the manufacturing with the industrial production is actually doing. As you can see, if you actually go back in time, you'll notice that this number is always positive. I mean, this chart that's giving us the data going back to 2007, we haven't really seen negative number. Only a couple of times when we saw the negative number was around the COVID. That's when the industrial production really fell. And after that, we saw a brief dip over here, and then we have been positive since then. So this is not a good sign that we are seeing out of China, which I think we need to pay attention to, especially in the coming weeks, if this has some ripple effects going into the other markets as well. Now, looking at U.S. data, we have the Empire State Manufacturing Index today, down 11.6%, and they're expecting 15.3%. So you can see that this is a big miss. So not a whole lot of optimism as we're getting this data, which is again pointing us that we are back in the recession. So something to keep in mind as we try to get ultra bullish in the markets. Given that the markets looks very extended, very bearish, this is the areas where the question we really need to ask is this all price action priced in, or is it further downside? So I think that this will weigh down on the markets, but market seems to be very extended as we've seen the markets being down 6 weeks in a row, and now we're entering the 7th week. So let's talk about this week events, and then we'll get down to some currency performance. Now, looking at this week, it's a little bit more active week compared to last week. We have CPI figures coming out of Canada. That's on Wednesday, pound and in Canada. So I think those two currencies we need to watch. Looking into the next 24 hours, we don't have a whole lot. We have some meeting minutes out of Australia, but tomorrow we start with the retail sales, which again, based on the numbers that we're seeing, I wouldn't be surprised that numbers are a little bit negative. We have Fed Chair Powell speaking, which again, we already know where the Fed stands. So this is where we have to really pay attention to the global market environment, see our arena risk on and risk off, and see how the currency markets are reacting to it so we can be positioned right for this market condition. So let's do a quick currency analysis and then take a look at some movements in cryptocurrency and foreign currency. Now, cryptocurrency looks like a bloodbath again. Last week, we saw a bit of a sigh of relief, but then these numbers are not positive. These are Bitcoin down 5.1%, Bitcoin Cash down 7%. Again, these are big percentage moves on the downside. So it seems like there's a lot more downside pressure in the crypto world. Now, looking at currency world, it was a bit of a mixed kind of day today. You can see that the price action, we like to see those 1% or 2% days. That's where we get the biggest move. Today was really not a day to be that active in the markets. As you can see, the price action, it wasn't really as strong or as weak. I mean, the highest or the biggest move really we got in the pound. And you can see that the best of the worst, you're looking at pound Swiss franc or even pound dollar. I mean, you're barely getting above that 0.5% mark. So the price action was not a good price action today, and something we have to pay attention to in the next 24 hours to see if we are actually seeing a bit of a pause in the currency markets, or are the currency markets are ready to make a bit of a change in terms of price movement. Now, velocity scores, again, you can see a lot more crammed in the middle. The cryptocurrencies were down -2, but outside of that, currencies were either -1 and +1. So, velocity, we like to see a +2 or a +3. That's when something is really on the move and, giving us a better price action. This one, it's a very much in the middle, a little bit leaning on one side and the other, but not a whole lot of velocity that we're finding, which is, again, the reason not really seeing a lot of trades to jump on. So let's talk about possible trades ahead. See where things are kind of heading as we constantly see markets go in and out of market correlation. So a day like today, the markets were a lot more choppy, but clearly that did not deter the markets or the currencies to actually pull back. So by that, I mean, if you take a look at dollar, you can see that dollar has started to come back from these levels. And if you haven't really watched a video, I sent a video out earlier today about the US dollar. We looked at some of the key technical levels, so make sure you do that because it's actually sent it out as an email, and you should also be able to check it out on the YouTube channel. But if you take a look at this level, I've drawn this level chart here. We are very clearly very extended on the US dollar. Now, in the shorter term, there's always signs for some sort of pullback, and that's exactly what we're seeing here. If you look at a 4-hour chart, and I always like to use the 4-hour chart just to kind of see a confirmation if we're seeing a bit of a trend change or just a normal pullback. At this point, we had this prior resistance, which became a support. We gave that support up. We are right at that between the 20 and the 50-day moving average. So if we can get below this, I think we can see further correction in the US dollar. But if this doesn't correct below that level and try to bounce off of it, just realize that we are still in a bullish price action, just taking a bit of a break in the shorter term. Interestingly enough, today the dollar did not rally when the markets were selling off. And that's a bit of a change because what we have seen in the past couple of weeks, every time markets start to sell off and the dollar just shoots up. That did not happen today. I mean, if you look at last week, you can see how many times price action was correcting, and then boom, a rally. Actually, let's go on a 4-hour chart so we can kind of see that. And you can see that, like, since last week, we have seen a lot of these big reversals that taken place, but this time around, it wasn't the case. So this is where it seems like markets are more relying on its own relative strength of weakness, or maybe just a bit of a short-term pause. So it's still not the clearest to jump on the conclusion yet. Now, let's talk about other currencies. I had questions about Canadian dollar earlier today because, again, same thing. As we look at these currencies, they are sitting as or hitting these key levels that we haven't really broken in the past few years. And you can see that we are just pushing against the CAD. It looks extended, and that's where the question comes. Should I take a pause when we hit these levels, or should I continue with that outlook? Well, just realize that every time you hit these very key resistance levels, that's where the price action likely to stall or make a bit of a reversal. Right now, based on the price action in Canadian dollar today, it did correct it a little bit off of that, but it's still looking very strong. You know, since we broke out that little basing pattern here, it seems like we're kind of on a run. So let's just use a 4-hour chart to establish that. And you can see that 4-hour chart still looks very bullish. For this price action to correct, we need to see things kind of falling back in range and maybe take a look at this resistance point. So far, CAD still seems to be winning the race here. Now, looking at other currencies like Aussie or like Kiwi, I mean, they both had a bit of a rally, but you can see the price action was kind of mixed in these currencies as well. Like last night, we got a nice little correction, especially as we got that weak China's data. But overnight, you can see we saw a big recovery. But pretty much, we got back to where things were before we corrected last night. So it is showing some outperformance. So that's a positive sign. But we still need to get confirmation if you're trying to pick a direction. All of these things are in this little bear rally mode. If I take a look at Aussie basket, we actually notice the exact same thing. We did actually, let's go on a weekly chart here. Some of the pairs that we saw, like Aussie dollar last week, you can see that we broke that support, and now we're just trying to make that recovery. So I think Aussie dollar, especially if this can get above it, then a little bit more of a relief rally can continue. But you can see that we got a pretty steep drop, and this is just nothing but a bear rally to me. So watch out for this price action, because we don't want to get caught up when other trades are loading up on this further direction to the downside. And as you can see, this was a very important level of support that it broke. And going on daily chart, we're seeing the exact same thing, getting a bit of bear rally. So watch out for this level, which is around that 69.83 to 70. After above that level, I think we can get back in the range, but this is important to kind of keep an eye on. So a whole lot that hasn't really changed in the markets. We had currencies that are actually just back in the range, like the euro. You can see they're back in the range. The Japanese yen seems to be pulling back a little bit. So notice that this was a prior breakout point, and notice that the breakout point came with a very nice candle, but we have almost corrected that. We are above the 50-day moving average, which makes it interesting to see if this level will hold or if this level will give up. If this level gives up, then we are back in the bottom range. If this holds, then we can actually look at yen more to the upside. But at this point, that's a bit of a long shot or early call to make. So let's talk about some key technical levels on some charts. So dollar CAD, you can see, made a very nice recovery. I actually did a video last week on this, talking about some key levels. As you can see, last week we did a big push towards that level. We reversed, and then here we are starting off with a lot more of the negative note here. So question is that, are we back in the lower range, which goes from 124 to 128 or 129? And at this point, that's what it seems like. Today's kind of price action was pretty weak, and it seems like we are kind of stuck in this range again, and this was a bit of a failed breakout. And this is why we like to watch these levels, because that's where the continuation takes place, and that's where correction takes place. Outside of that, other currencies, not really seeing a whole lot of divergence taking place. We can see Aussie, Kiwi. I've been keeping an eye on this one, but you can see it's just hovering around that resistance, which is just telling me that it's taking a pause, but it could potentially rally as well. So there are some decent setups, but it's just about the right timing here, and I'm not really seeing that timing that's falling in place. The Swiss franc, we had a short call on this one in the currency room, and so far the call was correct. Prices has definitely been moving lower, but notice that we are quickly approaching the support. Question is, are we going to bounce off the support, or do we fail through that? So this is where, let's go on a 4-hour chart, see if there's any sort of sign or confirmation. But right now, as you can see, this is still kind of in a fall here. Having some bear rallies in between, but this thing hasn't really shown a sign of reversal yet. So it seems like Swiss franc short still continues to be the play, and outside of that, not really a whole lot to kind of take a look at. A lot of choppiness. Look at Kiwi right now. Kiwi's been chopping as well, so not really seeing a lot of good signs. But this is where, when you're not seeing much price action, it's time to take a break and let the market come to you. Let the market tell you exactly when is the right time to jump back in again. It's not just about the technical levels. It's not about the trend score. We also need that velocity to support our trades. So in that case, we need to wait for that. So in conclusion, market likely to stay bearish again until the capitulation bottom. So is the capitulation bottom taking place? Well, we had that bottom last week. We have to see if that bottom actually continues to carve up to the upside. So market could actually make a reversal if can get some more traction here. Dollar long, question mark. Again, going back to that video that we did, I think dollar looks a bit more extended, so it needs to pull back a little bit. And once it pulls back, I think that will give us another opportunity to take a look at dollar on the long side. But in the short while, if you look at the 4-hour chart, we're kind of stuck in between the 20 to 50. So if we can give up that 50-day moving average, I think there could be a little bit further downside in the dollar, and then that should help some of the other currencies that's been pressured to the downside as the dollar has remained very strong. Well, thanks for joining. Have a great rest of the day. Have a good evening. And again, keep an eye on the markets, see how things are moving, and we'll be back with another update tomorrow. Take care. Cheers.